The Dow Jones Industrial, you can count the green there on, it's almost 1, 2, 3, 4. You count it on one hand, folks, as the number of up days the Dow had this month. 5 barely beat a record set in 1903. That's right. May has not been a good month for the Dow Jones Industrial Average or any of the U.S. indexes, really. And it almost never is, right? I mean, why? Why is sell in May and go away actually work? Jonathan Cheng, Wall Street Journal reporter, here to tell us.
Right. Well, you know, October typically has this reputation as being the worst month because a lot of the big historic crashes that we've seen came in October. But I think May is making a run for the money here, and we've had 3 Mays in a row of just atrocious performance. This is not the worst one, though. 2010 was a much worse May. That's when Greece and all their issues first became clear to, you know, the rest of us. But this year's been pretty bad. We're down 6.5% or something as of this morning.
On the Dow, right, and they're adding to the losses right now, so that number is going to change.
Right, and the first loss in 7 months. So it's a pretty bad month for May, and of course, as you mentioned, there's this saying that they have on Wall Street, sell in May and go away. And the funny thing was, the beginning of this year, first 3 months, everyone was saying sell in May is not going to work this year. That concept, it's discredited. Why? Because everyone knows it's coming, and, you know, things are different this time. We've dealt with this Europe crisis for 2 years now, so we're not going to be phased by a third year. But lo and behold, here we are, last day of May. And
yeah, I mean, that raises the question. Look, we've been reporting on what's been going on all month, right? I mean, everyone knows the headlines, everyone knows the stories. But if this happens every single month, I mean, is this really, is it a legitimate seasonal pattern? And do the headlines actually not really matter? Should people have, on May 1st, sold in May and just gone away? I mean, would you have saved yourself a lot of headaches?
Well, you know, May 1st, we got a nice little bump. So maybe if you sold, May 2nd this year, that would have been the ideal thing in hindsight. But, you know, I was chatting with a lot of investors, a lot of traders, and asking them, what's with this sell in May thing? I mean, is this just, you know, you hear a lot of different explanations. Some people say, look, it's just coincidence. The Europe stuff just happens to have popped up around this time the last 2 years and this year again. Some people are saying it's a self-fulfilling prophecy, actually. People sort of convince themselves that this is what's going to happen.
There's a 3-year pattern. Now, I'll tell you, if we took those numbers back further, you would see that this pattern does go on further. My personal saying, I've tried to push this one on the street, it hasn't worked, was sell in 2007 and go away. I think if you had sold in 2007 and gone away,
you'd be in heaven.
Yeah, forget May, sell in 2000. Yeah, right. Sell in 2007, you'd been in heaven.
I should be writing jingles.
You know, again, the European headlines, we know that they've been cropping up, but the European crisis did not go anywhere.
No.
I mean, it didn't go anywhere. And if you look at the bond market has been focused on that all year, the whole time. What is it really? I think it's the stock market that just, it follows these patterns and it ignores things when it wants to ignore it. Europe didn't go anywhere, but in January, February, March, April, the market pretended it didn't matter. I think this really is just, it's a seasonal pattern. You see it in the stock market.
And, you know, and there was one convincing case that I heard, which is, look, at the beginning of the year, we all like to believe that this year is going to be better than last year. Analysts, therefore, reflect this optimism in their projections for earnings. So you start off like this. And you know, to be fair, we had the LTRO, the long-term refinancing operation in Europe, which coincidentally, you know, got us off to a great kick at the beginning of the year. But for the first 3 months, you know, everyone seemed to be thinking magically everything was great. And April, we were basically flat. And of course, reality sinks in. So.
Right, reality, so talking about reality sinking in, you can see there's the 10 S&P sectors. 9 of the 10 are down this month. The only one is telecom. And telecom, I think there are 9 or 10 companies in telecom right now, and it's barely a sector, really. So you can see just a lot of weakness across the board. And you know, actually, I feel like this is a good place to mention one of the most prominently weak companies, Facebook. 25% in its short existence. Just a terrible month for them. But across the board, stock weakness.
Right, you can't just blame Europe. I mean, Facebook, exactly. You know, there were a lot of hopes and a lot of expectations that would lift the mood. Of course, it's done quite the opposite. And the grim news here is that sell in May. I mean, that's half of the axiom. The other half is, you know, go away.
Which means go away for the summer.
That's right.
So what are we looking at for the summer?
So what we're looking at is we're looking at a June 17th election in Greece, which is going to keep us, you know, on tenterhooks.
The edge of our seat.
Yeah, who knows what else is going to happen over this summer. And then, of course, we have the U.S. election coming up in the fall, which basically means a lot of people on Wall Street are expecting markets to sort of go nowhere for the next couple of months. So, you know,
they'll be lucky if it goes nowhere.
They'll be lucky if it goes nowhere.
They'll be happy if it goes nowhere.